In this video, I'm going to show you how dependable this VanEck Semiconductor ETF is as it concerns the direction of the markets. Okay, so this ETF obviously is a VanEck Semiconductor ETF. As you can imagine, it tracks the biggest the biggest semiconductor stocks in the US largely, and it says the components are the Taiwan Semiconductor Manufacturing, TSM, NVIDIA, Texas Instrument Inc., Qualcomm, Broadcom, ASML Holdings, Micron, Intel, Applied Materials. So the strategy is that let's see here, it says it seeks to replicate as closely as possible before fees and expenses the price and yield performance of the MVIS US Listed Semiconductor 5 index. The fund normally invests at least 80% of its total assets in securities that comprise the fund's benchmark index, and this quarterly return here is table is saying that it is down 27.37%. For the last 1 year, that is the annualized returns, down 27.37%. But the folks at Schaefer's Investment Research have pointed out that and asked which ETF is a dependable stock market indicator. So the author of this piece, as you can see, Rocky White, citing his colleague Chris Pybal, noted that a VanEck Semiconductor ETF, according to them, is the most liquid semiconductor ETF. It fell below its 1,000-day moving average for the first time ever. That even didn't happen, according to them, during the coronavirus crash in 2020. It's been argued that semiconductors are the new transportation stocks. In other words, the sector is a good measure of the health of the overall US economy and probably the global economy to a great extent, and can signal bullish or bearish times ahead. So this week he's been looking at the semiconductor sector to see how weak it is compared to the broader market, and if it has historically indicated where things are going. So you find a link to this piece in the description box below, and you can digest all of it yourself. So in conclusion, down here he's saying the semiconductor index has been a dependable indicator for stocks going forward. When SMH, the semiconductor ETF, underperforms by a lot over a 6-month period, it has paid off to bet on the downside for stocks over the next few months. When SMH has beaten the S&P 500 by a lot over a 6-month period, it has always made sense to bet on further gains. You can see the chart here. This chart compares the S&P 500 to the SMH chart as well. You can see, so this is the S&P 500 is down 17.98%, and then the SMH is down 30.7%. You can see that this is already a validation of what's going on. When it's down, over the last 6 months it is down, yes, and also it has also over the last 6 months it's down. And that's also the case with S&P 500. So based on that theory and that conclusion they have here, it is, and it might be that since as things stand right now, the SMH is underperforming, so there's a good chance that the markets might continue to decay further. There's a good chance that might be the case. So up till October 10th of last year, it was outperforming the S&P 500, and yes, the S&P 500 continued to do well, and 6 months before that time, yes, it was doing well. You can see that the peak of it reached its peak as of this is a good example. As of the 21st of October, it was outperforming the S&P 500. So here at this point, it was portending that S&P 500 will continue to do well, and it was the case. It continued to extend further until it reached this peak. So yes, it has that theory has been proved by this chart. So right now you can see there's further proof coming in. Okay, let's see, going back last 6 months from now, it will be sometime in May. Okay, so this is May. You can see that, yes. This is May 11th of May of this year 2022. So it is 6 months away from today. Okay, so you can see that it was underperforming the S&P 500. So it portended, it projected that the S&P might also do badly in the next coming months, and sadly that was the case. That was the case. That is the case. It's continuing to do badly. So if we are going to see any sign of improvement, it has to be that the semiconductor index, based on this theory from the folks at Schaefer's Investment Research, particularly from Rocky White, the author of this piece. Based on that theory, for us to see any improvement in the markets, we have to see an improvement in the SMH as ETF. But right now, we're not seeing any improvement yet. Okay, so this is an ETF to watch. If it begins to improve, then maybe things will maybe things may improve, may begin or may start to improve also in the broader market. But right now, we are not seeing any improvement yet. You can see it has continued to decline. The decline has ensued non-stop since the 25th of August, relentlessly. There was a time it rallied, just so too the S&P 500 rallied, rallied to this sort of levels, but it was rejected there, and the decline has continued to pan out. So as I said earlier on, if you were looking to see whether there's going to be any room, any improvement coming in, maybe you have to probably have a look at this SMH. But this is pretty much statistical at the same time as well. Fundamentally, you can't definitely make out what the correlations are there. But make your own decisions and see whether this theory actually does work. But statistically, it is proven to be the case. Okay, so thank you very much for watching this video.